Good morning and welcome to the Star Energy Group PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and could be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll, and I'd now like to hand you over to Ross Glover, CEO. Good morning, sir.
Good morning, and thank you everybody for joining me this morning. It's been about 3 months since we had an investor meet presentation. I thought it would be worthwhile just giving you some thoughts on our strategy, especially given that we've had the budget a couple of weeks ago. We believe that has changed things, potentially less uncertainty out there. So I suppose, as we look across the UK AIM-listed E&P sector, it's obviously a sector with very few materially scaled vehicles in it, a lot of small subscale players, quite often no revenue, with pretty high G&A, and certainly if there is revenue, the G&A is pretty high relative to the revenue. The delays that we've seen over the past couple of years with the uncertainty around the fiscal and regulatory regime in the UK has really drained cash reserves, and that has led to production levels declining, no new developments being pushed forward, with a real inability to invest in anything. That really comes back to, from a listing perspective, very low market interest, at low liquidity in shares, depressed share prices, those types of things. And to a certain extent, we obviously suffer from that too. We fit into that basket of a very depressed share price. But we do stand out. I think the first thing to notice is we've got cash flow. That really is a distinguishing feature amongst small cap E&Ps. Our cash flow is highly geared to oil price as opposed to gas. That has its positives, it has its negatives. It's more of a global price for oil versus a regional price for gas. But we've got revenue, we've got cash flow. That's very important. Our G&A management has been excellent by sector standards. I think management has shown over the last year and a bit that we will make tough decisions and will follow through with those decisions. Significantly cutting costs both on a G&A side of things, but we've also done the same on a gross OPEX basis as well. Our production levels are relatively constant, despite the sort of challenges around regulatory pressure, and of course the uncertainty that we've talked about over the last couple of years. And we've shown that we will manage our portfolio of assets well. We will sell assets that are surplus to requirement, and we will continue to manage our portfolio in that way. And obviously that's backed up by we are the operator and majority position in all 29 licenses that we're in, and our high quality skill set gives us some operational optionality, and really important transferable skills, some of which we're deploying into the geothermal sector, but could be deployed on a more wider basis. And one thing we don't ever really talk about is the fact that I believe we really do punch above our weight in terms of talking with regulators, talking with local and central government. Those discussions that we have with all of those stakeholders are really important, and have been important to us over the last couple of years. And of course, from a local level, we're a very long established employer, and we're a respected member of the community in the areas that we operate in. And so, as I said, budget was a couple of weeks ago. We had, alongside the budget, a response to various consultations that have been ongoing for a number of months. And whilst we feel that the UK budget was a huge missed opportunity, there was the opportunity to really kickstart growth in a very focused manner. That didn't happen for one reason or another, but I suppose what we can say is that quite a lot of uncertainty is now eliminated. We know that all the existing licenses will be honoured. We'll get license extensions. Obviously, that's very important to us with our long life assets, with a long producing tail. We know that development will be supported through transitional energy certificates. So if you are close to an existing field with a tieback to an existing field, you can probably go ahead and develop that. There's a lot of detail needs to be put around that, but we know the direction that everything's heading in, and there is some clarity over a replacement scheme for the EPL. Interestingly, we know now that the future system or scheme would deem us not to be in a windfall tax circumstance right now. But anyway, we will carry on paying the EPL as we need to. But I think if you take that sort of basket of announcements a couple of weeks ago, it does mean that if you are in the UK, in the E&P sector in the UK, you now have, I suppose, one of two decisions. That's either get on with things. You're going to be in the UK for the long term. You will probably start investing in more developments. Or I suppose the other option is you can start to think about how you exit the UK. And we believe that creates a very real opportunity for us with that sort of unique position of tax losses. We've got about £250 million worth of tax losses, which we believe are increasing in value now that there's some clarity post the budget, and that's alongside unlocking some of those decisions that have been sat on for a couple of years. And obviously we bring a unique perspective to that in that we've got some cash flow to sit alongside those tax losses. So we firmly believe that there are growth avenues for us, both on and offshore. We will bring G&A synergies for sure. And again, I'll remind you, we've taken some tough decisions around G&A over the last couple of years. We can do that again. Onshore, we bring significant operational synergies. We are the largest operator onshore in the UK. We run all of our own operations, and there are huge benefits in a little bit more scale there for us. And we have our in-house technical skill sets, which we'll leverage both on and offshore. So I think, put as a package, the budget from a couple of weeks ago, we believe creates a real opportunity for us in the business. And so I think, what is our focus as management? First and foremost is obviously we've got to keep on with our strong operating performance with our existing assets. We've got to be nothing changes from a capital allocation perspective. We will still be very disciplined in that. We've got to be very disciplined in that. We're in a relatively low oil price environment, in a high tax rate environment, so it's not a great combination. We will maintain our low-cost growth platform in geothermal. It's a platform that we believe in. We believe that there are huge growth opportunities there. However, and it's a big however, we need to see some clear policy support, which we believe will bring some really significant growth catalysts in these areas. But until we see that clear policy support and a direct line of sight to value for the money we invest, we will be in a sort of maintain the platform as opposed to significantly grow the platform. Lastly, and the last two bullet points are largely related, we will go and search for inorganic growth catalysts. We've talked about the opportunities that we believe are out there from an oil and gas perspective. We will deploy our abilities as an operator and our technical skill sets in those areas. And by doing that, we believe we can bring significantly more value to our tax losses. So I think to sum up, we have a number of growth options. We are looking to add a growth option to that. And we are looking to significantly grow shareholder value through some of the opportunities that we believe have been unlocked through the announcements over the last couple of weeks. And with that, I'm happy to take some questions.
Ross, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab situated on the right-hand corner of your screen. Just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Ross, as you can see, we have received a number of questions throughout today's presentation. Can I please ask you to read out the questions and give responses where appropriate to do so, and I'll pick up from you at the end.
Certainly. Okay. We had a couple of pre-submitted questions, so I'll run down those, and then I'll take them as they come. So first question, what are your year-end results looking like following a year of volatile and weakening oil and gas prices? Well, it's a good question. We're obviously being extremely disciplined in how we spend our money. What we will do is we'll provide a full trading update in February that will cover 2025 results within that. I'll move on to the next question, which is, given that we will no doubt have a change of government at the next general election, what preemptive actions and lobbying is the company looking to implement in order to be in a position to take advantage from the very start of a new approach to the United Kingdom's energy structure from hopefully a more favourable government or governing party leader? Okay. I think the first thing to say is we don't spend money on lobbying. I think that's a luxury that we can't afford right now. However, we have an incredibly powerful lobbying tool within our asset base, and that is our people and our assets on the ground. And so we can and we do speak to all political parties. As I say, we've got a very positive story to tell. We take politicians around our sites. We show them indigenous production. We show them a skilled local workforce in the East Midlands and the southeast of England. And we tell them how we plan or we could grow our domestic production. We tell them how that would bring investment to the regions and create skilled jobs and help lower energy prices, all the while producing lower emissions over imported LNG. So, that's obviously key to our ongoing production, but it's also a fundamental aspect to potentially realizing some of the low-cost optionality that we have in our very material shale option. So I think what I would say is we've recently hosted councillors in the East Midlands. We sent out a blanket invitation to all of the councillors across the East Midlands and Lincolnshire and Nottinghamshire. That same invitation went to MPs and mayors in that area, and we had an extremely good turnout. And I think the one thing that I would say is that when you get politicians, either local politicians or sort of central government, national politicians, I suppose, when you get them onto our sites, they understand the rationale of domestic hydrocarbon production. They really get it. So, in short, we are doing quite a lot of work. to publicize the good things we do as an operator and how we add or how we are beneficial to the UK economy. Okay, next question. The small cap UK E&P space looks pretty broken. Why would you stay in the sector at all? I think, as I've said, I think you're absolutely right. The UK E&P sector is pretty crowded with subscale companies, high G&A, limited access to capital. But I think that's exactly why there's the opportunity for us. We already operate in the UK. We've got cash flow. We've got a proven operating team. Our job is now to use that ability to operate in a challenging environment to build some scale. And we believe that using our cash flow, our operating model and tax position, we can turn things that are less attractive or marginal in somebody else's hands into something that's genuinely valuable for our shareholders. Okay. Next questions. What are the main catalysts for the share price over the next 12 to 24 months? I think there are three sort of key areas there. We would like to build some scale into our oil and gas business. So I think that is one thing is sort of building that scale and bringing more value to our tax losses is, I suppose, one key area. I think another key area is demonstrating that we can continue to produce cash flow out of our existing operational fields. And then I'd say a third area, and it's quite selective, and that is geothermal milestones backed by government policy. We'd have to see policy positions in the UK and in Croatia that demonstrates that the platform has got real bankable value and allows us to go forward and grow those without overstretching our balance sheet. I think those are probably the three buckets that we see, or the three areas of catalyst that we see around share price growth. Next question is, you highlight £250 million of tax losses. How do these create value for shareholders? I think as they stand right now, the value is there, but it is a low level of value because we put our taxable profits against them, and we slowly use up those tax losses. Obviously, the more taxable profits we can put against those tax losses, the more valuable they become, and obviously the more losses that we have, the more value there is anyway. But the key is really to finding more taxable profits, and that's how we monetize those tax losses. If we can shelter profits from tax using the losses that we already have, obviously the after-tax returns are significantly higher, and that's a core part of what we would set out to do. Next question is, are you aiming for dividends or buybacks in the medium term? I think the first job is to grow the business so that dividends or buybacks are sustainable rather than one-offs. Up until that point, I think that a one-off dividend, one-off buyback may hinder our growth potential. We're not ruling anything in or out, but we're certainly not going to promise any distributions before we can show that they are sustainable and they won't compromise our future growth or liquidity. I would also say the ability to make any distributions is very heavily influenced by the oil price. The oil price is not high right now. I can just see the next question deals with that. So, in the meantime, we want to create shareholder value by increasing our share price and improving the liquidity within our shares. And so I think onto the next sort of question, which is, with oil prices hovering around the $60 a barrel mark and the potential for a weaker dollar, how is the company doing? I think a couple of things tonight there. We've got an oil hedging program in place, which gives us some downside protection throughout 2026. And we actively manage our cash flows. We have the ability to flex some of our CapEx, and it's something we keep an extremely close eye on. It is a weekly, fortnightly sort of exercise. As you know, we've made pretty significant cuts to our G&A over the past year. We've also cut our gross OPEX bill, and these two have made the company so much more resilient to general sort of macroeconomic events. However, where we are, we've got low oil prices, we've got a weaker US dollar pound exchange rate, and we have the EPL, so it does generate some challenges. It hinders our ability for capital investment, and that actually is why we see real value in scaling up. By scaling up in the right way, we increase our resilience, we improve our valuation, and that's why we're looking for inorganic growth opportunities. Next question is, how do you justify growing oil and gas production in the context of the energy transition? I think it's really important to say, the UK will need oil and gas for a very long time, even in the most ambitious of net zero scenarios. The question is, where do the hydrocarbons come from, and how is it produced? We are a firm believer that the best place to produce those hydrocarbons is in the UK. We've got a strong health and safety record. It's better than importing higher emission hydrocarbons. We operate in an environmentally friendly way. There's so many economic benefits to producing hydrocarbons in the UK. However, we've also got our geothermal energy business. We are ready to invest in that. Our skill set is well adapted to that. We have a cash flow that can support the decarbonisation of the energy system in the UK. But, come back to it again, in that area we need some very clear policy direction from government before we start committing really material amounts of capital to that. Right. Next question is, recent TR1 notifications show that Peter Gillenhammer has recently built a significant shareholding in Star Energy. Can you comment on any engagement the board has had with him so far, how you understand his intentions as a shareholder, and whether you see him as being aligned with the company's current strategy and long-term plans? So I think to answer that question, yes, we have met with Peter a couple of times now. As you all know, he's a deep value investor. You can see that he's continuing to build a stake, and we have a positive relationship with him. We believe that he does support the current strategy. As I say, I've met him twice, and we obviously look forward to growing that relationship. It'll be a very important relationship for us, but we do believe that he is supportive of the business strategy. Next question is, how quickly could you realistically close a significant transaction? And I think it's a good question. There's a lot of moving parts there. On everything that we look at, there'll be due diligence, commercial terms to be agreed, regulatory approvals, and there might be multiple counterparties as well. So I don't want to put any artificial deadlines on it. We are actively looking at the market at the moment. We know what we're looking for, and I would prefer to explain why we didn't do a bad deal rather than rush into a deal just to say we've done a deal. I think history shows that the right deal takes time. We need to deliver the ones that genuinely benefit shareholders over time. So I don't want to just sort of run into any deal just for the sake of it. Next, I'll answer this one. Isn't this just another AIM lifestyle company? Lots of slides and presentations, but not much value. I think the obvious answer is going to be no. We operate real producing assets. We have 140 employees around the country. We generate cash. I think we've demonstrated that we take tough decisions on costs and on structure. Lifestyle companies don't do that. We've built in real capital discipline. I think you can see that with our disciplined approach to our geothermal platform. Again, lifestyle companies don't do that. Our plan is built around discipline, getting the right returns. And if something doesn't improve our cash flow or our positioning, we won't do it. Sorry, let me keep on going. Just a quick one. Well done on the Hollybourne site sale. Are there any similar deals envisaged in 2026? What I would say is, in terms of surplus land that's lying around not doing anything, we use all our land for our processing sites. We are not currently decommissioning any large swathes of land that could be sold. But as I said, we are pretty disciplined about our portfolio management. We're always looking at how we can operate better, and that may produce some value. But it's certainly not going to be in the next year. I think it's probably time for one last question. What keeps you awake at night? What are the biggest risks to the business and to our plan? I think there are probably three main areas. Very concerned about policy volatility. I think we're through that, but there's still a lot of detail needs to be put around transitional energy certificates and things like that. So we're certainly not naive about the political risk that's out there. And then obviously there is commodity prices, huge uncertainty around oil prices in 2026. I believe there's a real risk of oversupply in the market going into 2026. However, we've done a lot of work to make the business a lot more resilient to lower prices. And in the medium to longer term, we'd expect higher prices. Again, I think that's the opportunity for us here. And then I think the third area is capital discipline. There's a temptation in the sector just to chase deals. I think it would be our biggest sort of self-inflicted risk out there is doing a deal for the sake of doing a deal, rather than doing a deal because it actually creates value. So I think we've got to be very selective. We've got to stress test our decisions, and we've got to try and build some flexibility into our balance sheet so that we can absorb some shocks. And I think that's probably about our time.
That's great. Thank you for answering all those questions you can from investors. And of course, the company can review all questions submitted today, and we'll publish those responses on the Investor Meet Company platform. Just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, could I please just ask you for a few closing comments?
Yeah, sure. So, I think we have a very unique position as a business with some production, with some tax losses. We are hugely undervalued. We look forward to looking for deals that give us some scale and that allow us to build shareholder value. We look forward to taking you along on that journey, and we will keep you updated as things progress. Thank you for your time.
Ross, thank you for updating investors today. Now, please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Star Energy Group PLC, we'd like to thank you for attending today's presentation, and good morning to you all.